Have you ever scrolled through Zillow, looked at the prices, and just thought, how on earth is anyone supposed to afford this? You are not alone. Across the United States, from bustling cities to quiet suburbs, the dream of homeownership is feeling more and more like, well, a dream. But why? What's really going on with the housing market? Today, we're going to break down the complex factors that have made housing so unaffordable for so many people. It's not just one thing, but a perfect storm of economic forces, policy decisions, and market trends that have been brewing for decades. Let's start with the most basic economic principle: supply and demand. For years, the U.S. has been facing a severe housing shortage. We simply haven't been building enough new homes to keep up with population growth. The Great Recession back in 2008 hit the construction industry hard. Many builders went out of business, and skilled labor left the field. When the economy recovered, home construction didn't bounce back at the same pace. Think about it: fewer houses available, but more people wanting to buy them. That's a classic recipe for prices to skyrocket, and it's not just a lack of new homes. The homes that are being built are often larger, high-end properties because they're more profitable for builders. This leaves a huge gap in the market for smaller, more affordable starter homes, which are exactly what first-time buyers need. On top of the supply issue, we have the demand side of the equation, which has been supercharged by historically low interest rates for a long time. When the cost of borrowing money is cheap, more people are encouraged to take out mortgages and buy homes. This increased competition for the limited number of houses available. You've probably heard stories of bidding wars, with homes selling for tens or even hundreds of thousands of dollars over the asking price. It created a frenzy in the market. While low rates are meant to make housing more accessible, they can have the opposite effect when supply is so constrained, essentially fueling a price war among buyers. Now that rates have gone up, you'd think that would cool things down. It has to an extent by sidelining some buyers. But it's also created a new problem: the lock-in effect. People who bought or refinanced when rates were at 3% are now very reluctant to sell their homes and take on a new mortgage at 7%. This keeps even more existing homes off the market, further strangling supply and keeping prices stubbornly high for those who still need to buy. So we have a shortage of homes, and we have fluctuating but generally high demand. But there's another major player in this story: big money. We're talking about institutional investors, large corporations, and private equity firms. Over the last decade, these investors have poured billions of dollars into the residential real estate market. They buy up single-family homes, often in cash, outcompeting regular families. They then turn these homes into rental properties. In some neighborhoods, these companies have become the largest landlords. This has two major effects. First, it takes homes off the for-sale market, reducing the inventory available for aspiring homeowners. Second, it can drive up rental prices in the area, as these large landlords have significant market power to set rates. This makes it harder for people to save for a down payment, trapping them in a cycle of renting. It's a huge shift from the traditional model of individual homeownership. Let's talk about the cost of building itself. Why aren't we just building more houses? Well, it's gotten incredibly expensive to do so. The cost of raw materials like lumber, steel, and concrete has seen massive price spikes, partly due to supply chain disruptions we all became familiar with. On top of that, there's a persistent labor shortage in the construction trades. There aren't enough electricians, plumbers, and carpenters to get the job done. And finding land to build on, especially in desirable areas, is another huge hurdle. Zoning laws in many cities and towns make it difficult to build denser, more affordable housing like duplexes or small apartment buildings. These regulations often favor single-family homes on large lots, which is the most expensive and least efficient way to house people. So even when a developer wants to build more affordable units, they often face a mountain of red tape and community opposition, a phenomenon often called NIMBYism or not in my backyard. All of these factors: supply shortages, high demand, investor activity, and building costs are happening against a backdrop of stagnant wage growth for many Americans. Over the past few decades, home prices have risen much faster than the average person's income. Let's look at the numbers. In the 1970s or 80s, the median home price was roughly 3 times the median household income. Today, that ratio is closer to 7 or 8 times in many parts of the country. That's a massive gap. It means that even with a good job, saving up for a down payment, which can easily be over $50,000 for a modest home, feels like an impossible task. Student loan debt, childcare costs, and rising inflation are also eating into people's ability to save. The financial deck is stacked against the average first-time homebuyer in a way it simply wasn't for previous generations. So, what does this all mean for the future? Is the American dream of homeownership dead? Not necessarily, but it's definitely changing. People are getting creative. We're seeing a rise in co-buying, where friends or family members pool their resources to purchase a home together. More people are considering moving to more affordable regions of the country, enabled by the rise of remote work. And there's a growing conversation around policy solutions. Things like reforming zoning laws to allow for more housing types, offering more assistance for first-time homebuyers, and finding ways to incentivize the construction of starter homes. There are no easy fixes, and it will take a concerted effort from policymakers, builders, and communities to turn the tide. The housing crisis is more than just numbers on a spreadsheet. It has real-world consequences. It impacts where people can live, what jobs they can take, and when they can start a family. It deepens wealth inequality, as homeownership has traditionally been one of the primary ways for middle-class families to build wealth. Understanding the root causes is the first step toward finding solutions. It's a complex problem driven by a tangled web of economic forces and policy choices that have unfolded over many years. It's not your fault that it feels impossible. The system itself is under immense pressure. So, the next time you're scrolling through listings and feeling discouraged, remember the bigger picture. The high prices you're seeing are a symptom of these deep-seated issues in our economy. It's a national conversation we need to keep having. What are your thoughts? Have you been struggling with the housing market in your area? Share your experiences and ideas in the comments below. Let's talk about it. Thanks for watching, and if you found this video insightful, please give it a thumbs up and subscribe for more deep dives into the topics that shape our world. We'll see you in the next one.